Every trader faces one unavoidable truth: risk is always present. No matter how accurate your setup or analysis, every trade carries uncertainty. But while you can't eliminate risk, you can measure it, and more importantly, manage it intelligently. That's where today's strategy comes in. In this tutorial, you'll discover a two-indicator system that helps you clearly identify controlled, high-probability trade setups. It combines the DFT Overlay and the RSI-Based Moving Average, a precise and balanced approach to understanding both price direction and momentum strength. Let's get started, step by step.
Step 1. Setting up the DFT Overlay indicator. Open your TradingView chart and select any market you'd like to analyze. For this tutorial, we'll use BTC USDT on the 15-minute time frame. However, this method works equally well on Forex, crypto, indices, and even stocks. Now, click the Indicators tab at the top of your screen. In the search bar, type DFT Overlay and select the version written by the creator shown in the results list. Once added, you'll notice three lines appear on your chart: a white line, called the DFT Line, a colored smoothing line, red or green, which reacts to price changes, and a baseline area representing the equilibrium between both. Now, let's fine-tune this indicator for greater accuracy and visual clarity. Click the Settings icon next to the indicator's name. In the Input tab, change Fur Period from 20 to 25. Adjust Kernel Smoothing from 10 to 15. This smoothing adjustment helps filter out short-term noise and makes the signals easier to interpret. Next, open the Style tab. Here, simplify your visuals by keeping only the smoothing line and the DFT line visible. Hide unnecessary background visuals or labels for a cleaner, more focused chart view. Once done, click OK to apply your settings. Understanding the DFT Overlay. Here's how the DFT Overlay indicator works. The smoothing line, red or green, represents short-term market sentiment. The DFT line, white, represents a more stable underlying trend direction. Now observe how these two interact. When the smoothing line turns green and moves below the DFT line, it signals bullish conditions, a potential buy setup. When the smoothing line turns red and moves above the DFT line, it indicates bearish momentum, a possible sell setup. This forms the foundation of our system. But to confirm these entries and avoid false reversals, we'll combine it with one more indicator.
Step 2. Adding the RSI indicator. After setting up the DFT Overlay, the next step is to confirm market momentum and trend strength. And for that, we'll use one of the most trusted momentum tools in technical analysis, the Relative Strength Index, RSI. This indicator helps filter out weak or false signals by showing whether buyers or sellers currently have control over price movement. When used in combination with the DFT Overlay, it provides a deeper confirmation of both direction and strength before entering a trade. Adding the RSI to your chart. Click on Indicators again at the top of your TradingView screen. In the search bar, type in RSI and select the standard version created by TradingView. Once added, the RSI will appear in a separate window below your price chart. Now let's fine-tune it for smoother, more reliable signals. Go to the Input tab. Change RSI length from 14 to 25. This makes the RSI less sensitive to minor fluctuations and helps capture broader momentum moves. Change RSI-based MA length from 14 to 21. This provides a steadier moving average line that tracks RSI behavior more cleanly. Then open the Style tab. Highlight both the RSI line, blue, and the RSI-based MA line, yellow, to make them stand out clearly. Hide any unnecessary elements such as the background fill, upper and lower bands, or labels to maintain a clean, professional layout focused only on the key signals. Click OK to save and apply your settings. At this point, your RSI window should show two crisp lines, blue and yellow, that clearly represent the relationship between momentum and its moving average trend. Understanding the RSI logic. Here's how to interpret it effectively. When the RSI line, blue, crosses above the RSI-Based MA line, it signals bullish momentum, showing that buying pressure is increasing and the trend may continue upward. When the RSI line, blue, crosses below the RSI-Based MA line, it signals bearish momentum, indicating sellers are gaining control and a potential downward move is forming. This crossover structure helps traders confirm trend direction and strength rather than reacting to short-term noise.
Step 3. Combining the two indicators. The strategy. Now that both the DFT overlay and the RSI indicator are set up and optimized, it's time to combine them into one cohesive trading system. This is where structure, DFT overlay, meets momentum, RSI, forming a rule-based method designed to filter out weak trades and help you capture only the most reliable market moves. The beauty of this approach lies in confluence. We only take trades when both indicators confirm the same directional bias. Buy setup conditions. To identify a valid buy or long opportunity, ensure that all of the following conditions align. 1. On the DFT overlay, the smoothing line turns green, indicating that the overall structure is shifting bullish. The smoothing line moves below the DFT line, confirming upward pressure and a strengthening trend base. 2. On the RSI. The RSI line, blue, crosses above the RSI-Based MA line, yellow, a sign that bullish momentum is building. This crossover should occur either before or at the same time as the DFT's bullish signal to confirm alignment between structure and momentum. 3. On the price chart. A bullish candle closes above the previous candle's close, providing price action confirmation that buyers are in control. Entry rule. Once all of the above conditions are met, enter a buy trade immediately after the bullish candle closes. This ensures that the market has confirmed both trend direction and momentum before you commit to the position. Stop loss placement. Place your stop loss just below the most recent swing low or the nearest support zone identified by price structure. This protects your position from normal market fluctuations while maintaining a healthy reward-to-risk balance. Take profit target. Set your take profit at a 1 to 1.5 risk-to-reward ratio, meaning for every 1 unit of risk, you aim to gain 1.5 units of profit. This ratio allows steady growth while keeping drawdowns manageable, an essential component of professional trade management. Sell setup conditions. To confirm a valid sell trade, look for the reverse setup. On the DFT overlay, the smoothing line turns red, the smoothing line moves above the DFT line. On the RSI line, blue, moves below the RSI-Based MA line, yellow. On the price chart, a bearish candle closes below the previous candle's low. Entry rule. Enter a sell trade on candle close. Stop loss, place above the recent swing high or resistance area. Take profit, target a 1 to 1.5 risk-to-reward ratio. This system is not designed to predict the market. It's designed to manage probability and risk. To use it effectively, always set your stop loss and take profit before entering a trade. Trade only when all conditions are clearly aligned. Avoid trading during high-impact news or when the market is ranging. Stick to your 1 to 1.5 RR plan for long-term consistency. Backtest the setup on different markets before live trading. Remember, traders, risk cannot be avoided, but it can be controlled.
The DFT Overlay and RSI strategy gives you a structured, disciplined way to do exactly that, combining trend clarity with momentum confirmation. Use it to refine your entries, manage risk efficiently, and build confidence in your trade decisions. This tutorial is for educational purposes only and not financial advice. If you found this guide helpful, don't forget to like, share, and subscribe for more practical trading insights. Until next time, stay patient, trade smart, and manage risk like a pro.